Just can you label for us real quick what the split is in terms of contribution to revenue?
So government did, so last quarter they did 533 million. Government did 300 million out of that 533. Commercial did 233. So government is the majority of the revenue.
Yeah.
Or it is higher than commercial, but commercial is growing at 20% year over year.
Like 57, 58% or whatever is the split to.
Yeah, exactly.
So
Okay.
let's just say 60-40, and then what are the growth rates?
So overall revenue is growing at 13% year over year. Government's growing at 15% year over year, and commercial is growing at 20% year over year.
How does that add up to 13?
Well, no. So it's like 16%. Last quarter was 13% year over year. So overall, they're going to end the year at about 2.15 billion. So that'll be like 16%.
Okay, so commercial around 20, government around 15.
Yeah.
And AIP is doing zero right now.
AIP is doing zero revenue. Correct.
Okay.
Across the board, I think that's probably the biggest bear thesis, right? For Palantir is that growth is slowing.
Yeah.
Yes, the biggest bear thesis for Palantir. I think there's a lot of bear theses, but the biggest one from most industry experts is that they're not growing enough to have the multiple that they have. I think it's like a 15 times price to sales or 16 times. That's not good enough.
So let's just keep that sort of in the back of our mind as a framing mechanism to say, okay, this company is trading at, I think I looked it up right before this, it was like 15 price to sales, in a market where things have been beaten down after 2022. And so the money that you're going to put into Palantir is relative to everything else in the market, right? Because you're not going to get $6, $7 prices that you had 6 months ago. You're going to get, $15 or $14, whatever it's at.
Sure.
So maybe Tanner, I don't know how we want to do this because I have my questions, but do we want to take it sector by sector or segment by segment? Or just jump straight in?
Yeah, I just wanted to jump right in. So I know that there's a couple things that have always held me back, and I've had conversations with Amit on this as well. One of the biggest problems I find with Palantir is that because they are so political, their amount of customers is kind of limited globally because they can only deal with NATO clients. So my follow-up question to that is, what's the total addressable market for, let's say, the government growth side for Gotham for Palantir, and how much of that market do they already own?
So from the industry experts I've talked to, them working only with NATO clients is a bull case, not a bear case. I mean, a lot of companies had to leave Russia and China because of some of the issues that they've had going on. So I think it's good that they don't work in Russia and China. Their software is a bit too powerful to be implemented into the wrong hands. So you don't want dictators and authoritarians actually having access to that software. From what I understand, NATO itself is a $100 billion TAM for Palantir. I mean, that is a market that comprises of some of the biggest countries in the world, Germany, et cetera, that have very big pockets. I mean, Germany themselves are spending $100 billion on defense. So yeah, you add Germany to all these other countries in the mix. If you believe the world is becoming more unstable and deglobalized, the question then becomes, are those countries, even if they're not directly under attack from some type of authoritarian regime, would they be inquiring to have Palantir software in case this happens? And we've seen this. So Lithuania and Poland have been inquiring for Palantir software to the point where Palantir is now building a regional technology hub in Lithuania because they're Baltic states and they're worried that what's going to happen to Ukraine or what has happened to Ukraine might happen to them. And so if you believe that the values of democracy and peace are not normalized across the entire world, then Palantir software is one of those softwares in the context of Gotham that should be implemented into every single NATO country in order to fend off an attack and to predict if an attack could happen. And so I think it's a very big market. It's just a question of if they're going to be able to get it. And that's where they really have a monopoly. I mean, there are tons of government vendors, but the sophistication of what Gotham has created and the battle testing it's had over 20 years, I mean, it's their market to win. They just need the rest of the world to buy into it.
Okay, so what's the length of time that it takes to deploy this software from, in talks with their sales team into revenue making product for Palantir?
So Palantir has a weirder business model. It's called land, expand, and scale, acquire, expand, and scale. And so the idea is, like a Snowflake could be like, all right, you're ready. You talk to the sales guy, and maybe in like a week, you're onboarded onto Snowflake, and now you're paying a fee every month. Palantir builds custom software solutions for a lot of companies, which is why they hire these people called forward deployed engineers. And people say that's a bear case because that makes them more of a consultancy. I think that's a bull case Because what that is if you're working with, for example, BP, big energy company, and you're building them custom software that's going to transform their organization for the long haul, and it's going to be incredibly sticky, meaning they're never going to leave that software, the upfront investment you're spending in a forward deployed engineer, which might mean 18 months until you see revenue, to answer your question, is good, because in the long term, BP will find it so valuable that they'll buy 1% of your company, which is what they did in 2021. So to me, it's just a question of, yes, it's not as scalable, but it is more transformative. And the R&D they're getting from working with BP, they can take that to other oil and gas companies and easily export that in a fraction of the time.
So Tevis, could I just add to that real quick? Because it just goes off that question. So I was talking about the total addressable market. Then I asked how long will it take to deploy. I wonder why growth has been slowing if, the crazy turmoil that has happened with Ukraine and all of these things are supposed to be bull cases, which they should be, right? There should be a large ramp up in government revenue if, for example, Germany and Poland and all of these places are now starting to inquire. And well, I'm pretty sure the war started about 18 months ago, right?
Correct. Yeah.
So should we start seeing new revenue soon? Because from what I can see, government total revenue is still expected to grow around mid-teens all the way to 2030.
Yeah. Well,
yeah, so I worry about slowing growth.
Just to piggyback on that, I meant like Carp in previous calls. I remember this because I've been a shareholder for a couple of years. And one of the things that I really liked was the fact that he sort of promised investors, similar to how Elon is promising like 50% for the foreseeable future. He was saying 30% for the foreseeable future. Now we're at
2025.
Yeah, exactly. For the next few years. So like that disconnect, I guess, just to piggyback.
Well, I don't think it's a disconnect. I think it's a different way of looking at the problem. And this is where it's really important to like actually listen to what the CEO says. He was asked about this question in the last or in the second to last earnings call. Someone was like, what happened to 30% growth? And his argument was, we CAGR'd 30% over the last decade for the government. The last decade, 2010, 2020, they CAGR'd 30%. Some years it was 0. Some years it was 70%, because the government is the government, right? I doubt they've seen a penny of the Ukraine revenue, even though they know they're going to see that eventually. So if at the end of 2024, they get $500 million from Ukraine, I mean, boom, your CAGR is going to be at 30%. So I think it's a question of, now, if we don't see that happen, we don't see that happen. But I believe the company's still on track to do 4.5 billion in revenue by 2025. It's a question of, is that growth going to reaccelerate? And from all of the things I'm seeing on the government side and on the commercial side, they are sacrificing short-term growth, which I think is incredibly smart, because you don't need 80% growth right now. Like, why? Why do you need that where interest rates are 5%, where the macro is unstable? You can get smaller growth, focus on profitability, and then eventually all that contract value, that TCV, which is up 60% year over year, and their billings are up 50%, are going to be able to inevitably result in revenue. It's just a question of, do you believe as a shareholder that that's going to happen? And if you believe in FSD, then yeah, you could believe Tesla's going to eventually.
Right.
So why is the government revenue so unreliable? Like, they sign a contract, the contract has a fixed term of like 1 year, 2 years, whatever, they can renew it. How is that payout period so deferred in order to not have a consistent? Because like, okay, if you think of it as a like SaaS business, for example, you would be B2B, you would sign a contract with another business, and you can predict revenues into the future because you have contractual obligations from your clients to pay for that service. So I guess what I'm trying to understand is, I get the 30% CAGR and they can make it up in later years. Why or how is that the case for government?
I mean, I'm confused. They have a bunch of government contracts. They're making a bunch of government revenue.
So they have a government contract for Ukraine. Let's say they signed it last year. They're promised revenue.
Correct.
Are they promised revenue? Because I thought they did that for free.
They did. My assumption.
Let's just say the next thing, not Ukraine as a specific example, but like they sign a government contract for something, they're promised revenue. That revenue has a time duration where it's paid. How does that now lead to this unreliable, like?
I don't think it's unreliable. I don't know why they did $300 million last quarter. That's pretty reliable to me, right? It's just it might not all come in one
fall
chunk.
Within that 30% CAGR.
Well, the 30% CAGR is not government. It's revenue growth in general. Commercial sucks right now in the context of revenue growth, which is why I think we're not seeing 30% CAGR. Now, granted, U.S. commercial is growing at 67% year over year, but overall commercial, which means international sucks, is not growing that well. So commercial is what's weighing them down, in my opinion. Government revenues, actually, they just got like a $450 million contract a couple weeks ago. Government's the most reliable to me. The commercials.
This is what I was sort of asking. Like, is the Gotham side getting reliable payments on their contracts from the U.S. government, or are they not? Because if not, then that heavy reliance on the government, it's like they're always going to be on the back foot to get that money.
I have no idea, but I know they're going to get the money eventually. I mean, I've never heard of the U.S. defaulting on their contracts. So as long as if it all happens in 2025, we're going to have 80% growth. Like,
yeah, don't get me wrong. Gotham is like the part of the business that I think is the stickiest in terms of a moat perspective, just because there's no real like major other player in terms of just that product offering.
Now, sorry, go ahead.
I just had a piggyback question in terms of the deployment, just picking back up on that. So if I could sort of reiterate in my own words, because their software is manpower heavy to deploy, let's say, it's going to eat into their margins in the short term, but that's also going to lead to a custom solution, which makes it stickier later on for that business. Is it like, I guess the underlying question there is, can we see Palantir as they scale, because they're always going to have to scale these like, what do you call them? Forward deployed engineers. They're always going to have to scale that, like their staff essentially, to continuously make custom deployments.
And well, I actually don't know if that's true. I think part of the bull case is that they're doing that now to help learn the algorithms. So tell me if I'm wrong, Amit, but isn't that part of the whole like oncology sort of thing? Is that they're
oncology?
Ontology, sorry, oncology. I don't follow in this industry as often as people as maybe.
Look, the argument around forward deployed engineers, I'll give you a good example, is healthcare, right? So they're competing for a $500 million contract from the NHS, which is the United Kingdom's healthcare system, to give a overhaul and digitally transform their socialized healthcare system. The reason Palantir is in the bidding to get that, and is likely I would say they have a 70% chance of actually getting it in the next couple months, is because they did so much R&D with Cleveland Clinic and Tampa Bay General, that are other clients of Palantir. From 2021 to 2023, there's a great CNBC article that covers this. They failed for like a year and a half. They kept making products that the nurses didn't like, that administrators hated, that all this stuff happened. But once they finally figured it out, they built such beautiful products for those nurses and those hospital administrators to be able to use, that the nurses couldn't imagine using anything else. And we're talking about, taking patient data onto a modern software versus on Excel spreadsheets. As a result of that R&D, they probably paid forward deployed engineers millions of dollars to try to figure that stuff out for 2 years, which was hurting their margins. But now that they know what to do, they can go to any single hospital in the world and deploy.
Right. Okay. That's what I was saying.
Yeah. And it's not like Snowflake, but you got to ask yourself, what is Snowflake? It's a data house. Like it's just collecting the data, and that's cool. But actually ontologizing and making sense of the data and then getting interpretive decisions from that data, that's really freaking hard. And so it takes a lot of R&D to be able to get there.
Yeah, I don't want to beat this part up, but the revenue growth rates are like the one reason why at these multiples, I just really can't, especially at the $20 ranges, I just could not see myself holding it for too long. I was looking back on it just before the call, and I didn't do too much research, so I'm really heavily relying on you, Amit. But revenue was growing at about 40 to 50% ranges in 2021.
Correct.
In 2022 is about 30%, and then in 2023 it's like in the teens.
But you know what happened over the past 2 years, right?
But that was supposed to be very bullish for Palantir.
But interest rates went up. Every SaaS company took a hit in this respect.
Okay, so basically, hold on, just let me double tap on that. The decline in the growth rate you're saying is the primary contributor to that is Foundry.
No, I'm saying the primary contributor is interest rates went up. Enterprises were scared of spending.
From a segment perspective,
it's commercial. Commercial, yes.
Commercial. Okay, cool.
Yeah, and that makes sense because enterprises are less, ready to adapt and pay. Their average client pays $2.9 million. Their top 20 clients do $56 million in revenue. I mean, like, they're not going to pay for this stuff when they're unstable. And in 2022, all hell was breaking loose. So the fact that Palantir is GAAP profitable and they're on track to be part of the S&P 500 over the next couple quarters as they continue to maintain GAAP profitability, and they're not showing that much revenue growth, to me, this is a massive opportunity for investors. Because it's like, if you believe in the story, the revenue growth will come. And the other parts that Wall Street cares about in terms of GAAP profitability and getting your shit together, they're doing right now. And I don't need to see 80% revenue growth right now. Like, it doesn't need to happen, but it will happen eventually. And when it does happen, I'll have thousands of shares ready to go.
Gotcha.
Let me just read this comment, and because it, I think, wraps up the government side, and then we can move on to commercial. So when it comes to government contracts, so this is probably somebody that works at Palantir, we usually just create the initial contract tied to option years. I still don't know what option years are. This makes it smoother for quicker execution and provides clarity on any price changes.
We usually just create option years, makes it as simple as just reordering a favorite meal from Uber Eats.
So here's an example. Say if Zoom wanted to get a government contract to provide video conferencing for the US military, we will create a contract with Zoom that includes 5 years. We don't have to renew, but we expect to. Making option years provides a way for the US to cut new contracts before end of fiscal year ends, so they won't lose funds.
I still do not fully understand option years,
Yeah.
but this Matt guy seems like he's making sense from Palantir.
Okay, so sorry, go ahead, Daniel.
No, I was just gonna say I necessarily didn't want to pick this apart going from commercial and government. I mean, we can. I'd like to know potentially why U.S. revenue fell sequentially, or even commercial in general. What the top 20 clients are doing. I know that they dropped some statistics on that, as well as future. Do they call it bookings or billings?
Billings.
I'd like to know that as well, because that also tells for future growth. I'm pretty sure they show that off, if I'm correct.
Maybe I can also just piggyback on that with just a little bit of just additional context, I guess, on the commercial side. I remember in previous earnings calls. Now, granted, my knowledge on Palantir might be a little dated, but on previous earnings calls, they had mentioned that one of the biggest barriers to commercial growth was educating companies on what's possible when they ontologize. Like basically taking all their data.
That's what those cons are for, right?
What's that?
That's what the cons are for, the AIP cons and such like this. So that's their sales and marketing tactics.
So, but this was one of the reasons where they. Sorry, I read a comment. This was one of the reasons why they were saying it's a little bit difficult for Foundry to pick up steam, really, because they have to accurately convey to enterprises that all they're doing is they're taking all the existing data, they're labeling that data, they're grouping that data, and then they're drawing insights from that data. And that's what the whole process is. But now, from what Amit is saying, it sounds like, well, the reason why Foundry fell is like macro driven. So like, I guess that's the piece that I'm trying to put together, where in 2021, where there was a good market, they were saying, well, actually, we have to educate all these customers on how they can use it. And, that has a long life cycle, so on and so forth. And now they're like, oh no, it's macro. And that's
it's probably both, bro. It's not that complicated to me. It's probably both.
Yeah, I find, and Amit, what do you think about this? Because like you showed that slide where it shows all of these different segments that Palantir wants to get into on their commercial side, all these different industries and everything like this. And then every single contract that I see Palantir come out with on the commercial side, and I don't follow it very closely, so it's usually the big ones, but it's just hospitals and healthcare and all these things. It seems to be very specialized in that area, and I don't see a lot of retail companies actually choosing Palantir. Does Walmart have a contract with Palantir?
Yeah, actually, it's funny you bring that up. Walmart just signed something like 3 days ago using Palantir.
Perfect.
I mean, well, on that, I think it's just like some ignorance on your part. I don't mean that in a negative. It's just like you are oblivious to some of the deals they've had.
Yeah,
right?
no,
So,
I'm asking.
Yeah, so Westtrack, they launched a partnership with Azul Energy, JD Power, Dish, Bloodhound Enterprise from Spectre Ops. It's a governmental contract.
Right. So there's a bunch of energy places as well. A lot of oil, right?
Jacobs, that's an engineering manufacturing company. What else do we have here? CNA, this is H&M of Latin America, essentially. So that's literally a clothing retail store.
When did they close that?
They closed that April 5th.
For Foundry, we're saying?
For Foundry, correct. And AIP. Foundry.
They signed a pretty big contract with the NHS during COVID just to like...
The NHS to deliver vaccines. Well, that goes to Tanner's point about healthcare. Cloudflare, AWS, they launched a platform with Microsoft to have Foundry operating systems. DuPont Therapeutics, that's drug discovery. RStudio, That's a big developer company. I mean, there's a lot of clients that they work with that are outside of healthcare or energy.
Okay.
Healthcare and energy are big for them, but they are definitely in a bunch of different sectors. And real quick, Lockheed Martin, JD Power, Molson Coors, that's a beverage company, Panasonic Energy, Cisco, PwC, RBC, that's a bank. Yeah, there's a lot.
RBC, that's a bank to the two Canadians. It's the biggest bank here in Canada.
I forgot.
JP Morgan, that's a bank.
Morgan Stanley, no, but they work with, like, you got to remember, their top 20 customers do 56 million in revenue. These aren't small healthcare and energy companies. These are like some of the biggest enterprises in the world.
Isn't that like a risk though, like concentration risk?
No, I think that means, holy crap, their top 20 customers are like really doing well because of Palantir software. Let's see how more they can increase that. Yes, I want them to get into small businesses more, but that's just not where they are. They're not like a Snowflake where you could pay $20 a month, like the average.
Yeah, but like, so where I'm basing it is like, for example, for Galileo, the quarter where they lost current, they saw a down quarter in terms of active accounts. Like that sort of broke the trend of growth. And so that's what I'm saying by concentration risk. Like if they lose, one of their biggest clients, and that can severely hit their revenue projections, their CAGRs, and all of the things that Wall Street is basing them on.
It could. Yeah. So their software better be good enough to not lose that client.
And then, so what's it called? Whenever they get these clients, how is their revenue growth rates amongst their top 20 clients? Like how is their relationships deepening?
Well, so Karp said on the latest earnings call, so AIP obviously is not monetized yet. They have 421 total customers. That's it. The company's going to do 2.1 billion off 420 customers. And by the end of the year, it's probably going to be 500. So call it 500. 400 out of those 421 are in the pipeline to use AIP. So I think they have a very special relationship with their clients, whether they're small companies like Lilium, which is an eVTOL jet company, or BP, one of the biggest companies in the world. They are working to expand the relationship they have from a technological moat perspective with each of these companies to continuously deploy better, more engaging, more faster, innovative software. I mean, a lot of these companies partner with Palantir just so they have some level of innovation within the organization, because the companies themselves, like Cisco, is not innovating, but Cisco's using Apollo, which allows it to be able to innovate a lot more faster. So if AIP can scale across those 400 companies, and let's say by 2030, that becomes 4,000 companies that are using AIP, and if we believe LLMs are going to be incredibly valuable to them, then acquiring them, expanding into them with Foundry, and then scaling with AIP, that's where I think you get Palantir getting to the 20-30 billion in revenue over the next decade.
So
right.
I just want to stick on that point for a second, because if Palantir did not have AIP, they would not be trading at this valuation. Like we can all agree on that. That's like a fact at this point. The reason it increased so much this year was because AI is the next thing. It's the next buzzword, similar to how the metaverse was, before, similar how to, one could argue like NFTs the year before the metaverse. So I guess with that, Karp said in the latest call, like, we're going to figure out how to monetize it, which suggested to me that, they have interest from 300 enterprise clients or however many, but they don't really have a clear monetization strategy right now. And it seems that that's very much the case for a lot of these companies that are using, that are leveraging LLMs. It's like, there's a lot of similar to the metaverse, right? Like there's super hype. Facebook changed their name. Everybody's like, wow, but there might be a huge gap. So two things, right? And I guess this goes into a more like philosophical conversation, but like the worry number one is that it will not pan out to be as impactful as people are initially thinking. So, I'm basing it off like NFTs, the metaverse. Like every year you have this like one concept that captivates the market and boosts all the stocks in that industry. So that's number one. I do think it's going to be impactful personally, which brings me to sort of bear case number two, that it will take 5 to 10 years to fully play out so that we can actually see all of those benefits. And all that we're doing now is we're front running the stock gains that we're going to have in 24, 25. So by Palantir going all the way to $20, let's say in 23, we're basically ensuring that from a valuation perspective, we've stolen all of those gains for the next 3 years, while the company executes on actually monetizing on that AI aspect.
So is there high expected growth for 2023 then? Or is it still like in low teens?
It's in low teens. I think the company said 16 or 17%. That's what they're expecting.
For next quarter or for full year?
For a full year.
Okay.
So which sucks, right? Because last year we did 25, which is still below the 30 we did. So I think Tevis, you're correct on this. In 2024, 2025, definitely 26, we want to see those increased growth rates. The only thing I would disagree on is if it is real, if it's not NFTs or crypto, and the market's expanding as it's growing, then Palantir at $20 is front running the gains for the next 3 years. But if the market itself is getting bigger and Palantir is able to execute on capturing more of the market, those gains get even bigger and bigger. Now that's a big if on if that market can get to that point. And that's what I spend a lot of my day trying to do when it comes to analyzing Palantir is this AI market? Because even I didn't believe it a couple months ago. I'm like, Bloomberg says $4.4 trillion of enterprise AI spend by 2033. I'm like, what? Like, why? Why does it matter? And the more I talk to people actually in the industry, even using Palantir software, they're like, it's real. It's a real thing. LLMs are serious. It's big. It's important. It matters. It is changing the architecture, the paradigm for how people engage with software. And Palantir is poised to capture it. The reason they don't have a pricing strategy, I think, is actually pretty genius. They don't know what to price it at. Like, how valuable is an LLM for your organization? Is it worth 10 million? Or is it worth $10? And if we think it's worth at least 5 million, why would we settle on a price for that right now when they launched it 10 weeks ago? And so to me, if they can stay for a year of not monetizing, but getting a crap ton of clients hooked onto it, and those clients are like, yeah, we cannot live without this, then they're going to have a massive pricing power. And then, end of 2024, that revenue is going to front run and it's going to be exciting.
But I mean, even in that statement, again, we're just saying, is it a good investment or should we invest? Or like, that's the sort of parent question. Even in that statement, there's like 3 derivatives, right? If AI is real or not, like as a macro, if Palantir can execute on AI or not, and if
Correct.
Palantir can price this correctly or not.
Correct.
So I guess the underlying thing is like to be paying a 15x price to sales in a down market for a company that's growing 13% because there's the promise of accelerating growth rates with multiple layers of uncertainty or pre-baked assumptions. It's incredibly risky, no?
I mean, it's a risk. That's the stock market, baby.
And the reward is a potential 10x when it reaches what you said. I think you said 200 to 300 billion in 10 years.
Yeah, I think it could be an Oracle market cap, so from 30 to 300. But I remember a lot of people, and especially in the Palantir community, we were buying this shit when it was $7-8. So for us, it's like we understood the thesis back then. The thesis has only gotten better. The risk has increased, but the thesis has gotten stronger. So the risk doesn't feel as risky when it's up 150%. Do I think $14 is cheap? No. Do I think $14 can be cheap in 10 years? Yes. So yeah, I think it's a risk, but it's worth it.
Okay, if you were that Wall Street analyst, strong sell, hold, buy, strong buy, where do you place yourself for this stock?
$11, I think, is reasonable given the growth rate. Now, in general, I'm really excited about their potential, which is why if you want to pay 14 or 16, I don't think it's the craziest thing in the world to give them that premium. Just know you have to see that growth play out. Like, it's not going to happen quarter to quarter because this is just not one of those companies. Same thing, like FSD is not coming next quarter. But in general, it should probably be worth $11, $12. I mean, I thought 20 was insane. I didn't sell a single share because I'm not trying to time it. But I knew at 20, it's just, there's no way it can sustain itself. Now, if they had put up 30% growth in the quarter, 20 would have been fine. And I remember people were paying $30 in 2021 because they were growing 41%. But since that has changed, it's left people holding the bag because the growth has declined. So
what is the institutional holdings? Maybe you said it, I just missed it.
33%.
33. Okay. And the short percent on the stock, do you know that? Or
7%. Yeah, it's not a lot.
7?
Yeah. I think so.
I mean, hey, it's better than SOFI's.
Yeah. So, I mean, like, look, I think 11, the market cap is like 25 billion. They're doing 2 billion a year in revenue. I mean, like, I think that's a bit reasonable. Now that they're gap profitable, you can give them a little bit of premium as well. And I get a lot of shit from people in the Palantir community saying, oh, Amit's price target is 11 or 12. But like, I don't really care. The growth is not there yet. Now, granted, if you think the growth is going to be there, then 14 is not that crazy to buy. Even 18 is not that crazy to buy. But just know you're not going to see the growth for years. And until you see the growth for until those years happen, then, you might be holding a bag. So from 7 to 11 was a golden time of buying it. Nothing has changed this entire year. I mean, literally nothing has changed. AIP, yes, but nothing from a growth perspective has changed. So that's why I think 11 is pretty reasonable to keep it up.
I think there's a lot of stocks that have kind of seen large drop-offs because macro has been hard. I think of like Upstart or Enphase or something like this that has been impacted by high interest rates. And I don't think that Palantir has seen that sell off like the rest of the companies have, even though the potential for why the stock is down is similar reasoning. Is that fair to say?
I don't think Palantir is necessarily a meme stock like some of the ones you mentioned. I mean, it definitely is meme-ish with like running up to 20 is probably unreasonable. But yeah, I mean,
meme. I'm talking about impacted by macro. Like,
oh, yes. The problem is that it's like Palantir is a victim of macro because interest rates are high, enterprises aren't really willing to spend. But AI, I guess, is a macro thing that's happening right now, and Palantir is a beneficiary of that.
sure.
So Upstart kind of was when it comes to AI lending, but at the end of the day, when you have net income, going that way and revenue, it's going to be tough. So Palantir is up and to the right. They're not up and to the right as much as they need to be, and you've got AI supporting them. So, for example, if Nvidia collapses on Wednesday, Palantir collapses. Like it's that simple. I mean, Palantir went up $3 when Nvidia went up $100. So
there was some analyst today that just put a $780 price target on Nvidia.
Yeah.
Well,
So-
bless his heart.
if Palantir gets to if Nvidia gets to 800, Palantir is going to 20. But
So okay, but like let's stick on that for a moment. If Nvidia is like the picks and shovels play of AI, right? Like they provide all of the hardware required, and obviously Nvidia is going to be a clear winner if AI booms. If Palantir is going to be a clear winner if AI booms, like that I think is TBD. Right now, it's a lot of execution risk, and there's a lot of other players playing in the software side of building out the LLMs, right? So my question to you is, what makes them the pick in the AI space? Like, if we believe that AI is going to be big, why would I invest in Palantir over somebody else? Like, I understand I wouldn't invest in Nvidia because Nvidia might not have that 10x potential from whatever 1 trillion to 10 trillion. Like, obviously not. But there's other picks that are in the AI space now that provide more relative safety. So I guess like, what's special about Palantir in the AI space specifically?
I don't think if I could just say really quickly, I think they're in a different space. Like, you look at all the different companies that are in the payment sector, right? I think that Palantir and Nvidia can play side by side. They play two different roles.
Yeah, but you can only put your money in one, right? Like,
are you asking him which one he's going to invest in more?
No. I'm just saying, if somebody is looking at it today and doesn't have a position in either, what makes Palantir the pick out of all of the potential bets, quote unquote, I can make on AI?
Well, so I think here's the thing. Like, if you're investing in Tesla, you're investing in a proprietary FSD AI play. NVIDIA is the GPU demand. Google is, I guess, whatever they're working on with TPUs. Amazon is how they're incorporating LLMs into the website and cloud computing. I think Palantir is in a whole different world, as Tanner says, because they're creating tooling infrastructure that allows you to implement an LLM into your organization at scale. So Foundry is an AI platform. Like we just don't mention it anymore because now we have AIP, but Foundry for the past 20 years has been working in AI. Again, Forrester named Palantir as the #1 leader of selling AI software to the enterprise, ahead of Microsoft by $100 million in 2022. So they've been in this AI game for a long time. AIP is just a new way to consolidate how humans relate to information, which is similar to ontology in terms of its unique data visualization capacities. But now when you have chatbots, it's a whole different game. So if you're betting on LLMs will be rampant throughout every organization in the world because they need it to maintain competitiveness, just like if you didn't have a .com in the 2000s, like your business was going to be irrelevant by 2010, then betting on Palantir is betting on a play that is the foundation for those LLMs to be implemented meaningfully. And there's other companies that are going to be doing that, but outside of like Databricks and Snowflake, Google and Amazon make too much money off other shit to really be that interested in it. NVIDIA, again, has chips. Tesla has AI for FSD. So Palantir seems like the clear company you would vote on at that point.
So I saw just doing a little bit of light reading before this. There's this RBC analyst with a $5 price target on Palantir. His whole argument is on the AI front. Like, I don't think it should be valued at $5 because obviously, Gotham is pretty rock solid. Foundry is pretty rock solid. I mean, you could argue. And just to value it like purely in AI, I don't think it's fair. But granted, we're on the AI point. His argument was that it's not truly a generative AI company. That, like, I guess the question that stems from that is what makes Palantir differentiated when it comes to generative AI across the industry? Like,
so Palantir is not a generative AI company in the context of like Tesla. Like FSD is true generative AI. Palantir is a picks and shovels play so that you could implement generative AI workflows in an organization, which is really freaking hard to do, so that that organization can become more productive, which is what they've done forever. They've done business intelligence at scale, and they've done it in ways that makes BP pay $430 million for 1% of the company because it's that good. So yeah, it's not a generative AI company. Is it worth $5? No.
Right.
but it's still valuable, and it can be very valuable.
Yeah. Oh, whoa. Hey, hold on a minute here. I'm sick, so I've been chugging water back, and that's the first sign of that. What I was going to say is I'm just still lost on the and I don't think that there's an answer. I don't think anyone has an answer for it. But that the growth is just slowing, and the price of the stock is not quite reflecting that slowing growth. And I think people are holding on to small catalysts like S&P inclusion and these sort of short-term catalysts, which can be great, but also have to be coupled with growth behind it to hold up those multiples. So if new multiples get hit and can be sustained after S&P inclusion, and then growth continues to stay around early teens, it is going to come down regardless, with or without funds holding the company.
I agree.
And yeah, I guess that's my biggest problem is like, I don't think I would buy in at $14. And I wonder why people held it at 20. And I guess they didn't, right? If there's a 25% drop in the last little bit, but
yeah, I mean, I've spoken to some institutional guys that, manage 30, 50 million bucks, and they're big in Palantir, and their argument is just like, look, we believe that this is going to be a I don't even know the best way to compare it, but like an NVIDIA, Tesla-like company, not in terms of returns, but in terms of the level of importance they have for the entire world. This is why I think Dan Ives came out with a $25 price target. His argument has simply been, he talks to CIOs to get chief information officers, and their number one reference point when it comes to implementing enterprise AI is Palantir. He's like, they don't even have a benchmark to check back against, what they could be using other than Palantir. Now, none of that revenue has gone into Palantir yet. But if this is what you're hearing from everyone in the industry, then it's just a matter of time until those growth. Like if Palantir is growing at 40% year over year, that's not even a question. But the growth rates aren't there yet. So the question is, do you think they're going to grow there? And if they do, 14 will be cheap. But the question is that growth going to come? And I think that's the risk reward as an investor.
Sure. Do they talk about their future clients that they're actually going to be signing up, or the revenue that they're expecting, growth-wise over the next couple?
It's actually very informal. I mean, Karp on the earnings call literally said, we learned how to monetize Foundry, we'll learn how to monetize AIP. I mean, it was probably the worst answer you could tell to a hardcore Wall Street numbers guy, because his argument was like, look, we got 400 people. We'll see if we can close them. Yeah, and if it's valuable to them, what'd you say?
It's basically like, trust us, like yes, we can get it done. Like I can't.
And this goes down to investing in people. Like I have money in Karp because I don't think he wants to be on stage in 2027 while the stock's $20 are talking about how they were going to take the whole market, and they ate a little bit of cheese. Like, it's like, no, like I think Peter Thiel is someone who doesn't lose. Peter Thiel does not lose. And even if it takes him some time to get his wins, he will win. And I think Peter Thiel and the philosophy he put into this company, along with Karp leading it, I know the numbers don't show it yet, but that's where you have to get nitty gritty into the company. And if you believe that it's going to be there, then it will be there.
How involved is Peter Thiel even in Palantir at the moment? Because I thought he was pretty hands off right now.
I believe he is pretty hands off. He is the chairman of the board. And I mean, he created the company, the governing philosophy, the ideology behind it. I think he was instrumental to some governmental contracts over the past 10 years. I don't know how much he plays on a day-to-day role, but I know the guy doesn't lose, and he hasn't sold a single share since 2021. So,
yeah. So I see some people in the comments just mentioning, Datadog as a competitor. Maybe you can talk a little bit to, towards that point specifically, because I don't know too much about who could be considered the most direct competitor out there.
I think the most direct
Datadog.
I think the most direct competitor is Databricks. That's a private company. They were valued at $38 billion in 2021. Google, Facebook, Amazon, they all invested in their, I think, Series F round of funding. They're going to go public likely if ARM goes public this year, and they just acquired a company called Mosaic ML for $1.3 billion. They are trying to create tooling infrastructure similar to Palantir. So there is a difference. I'm not as technical enough to explain the difference, but if I was a naive, random analyst, I would say they're in the same bucket. I think they're the biggest competitor. I don't think Snowflake is really a competitor. Datadog may be a competitor, but Datadog is not really doing AI infrastructure tooling to the best of my knowledge, the way Palantir is doing. I could be wrong on that. But most people compare it against Snowflake. And the reason they do is because Snowflake has 8,000 clients. They're growing at, I think, 60, 70% year over year. And they're doing $2.6 billion in revenue. So it's just funny to me because Snowflake has 8,000 clients doing 2.6 billion. Palantir has 400 clients doing 2.2 billion, not that far off. And so the question becomes, which one is more transformative for an organization? I think of Snowflake the same way of AWS. It's like you can move from a different cloud platform if you want, because at the end of the day, you're paying 20, 30 bucks a month, and that's why they can get 8,000 clients. Whereas with Palantir, if you're using Foundry, like you're hooked. And that's why it's so hard to acquire a customer. But when you get them, they really stay. And that's why, the top companies are coming to the platform.
Yeah, no, I am really, really hopeful and excited about Palantir. I think like as a company, it's really exciting. But as a stock, I did sell out earlier on that rise up. I didn't hit any $20. I think I got out at like 16.80 or something like this. Because yeah, like I don't know how high like I can ride that sort of position. And I just think maybe there's better opportunities out there. If, for example, Amit, you're saying that, maybe fair value is at $11, and like, do you think there's better investments out there for your 30% of the 30% holdings that you have in this position placed somewhere else in your portfolio?
Short term, yes. Long term, no.
Okay.
I mean, like, so, and that's the thing. There's a lot of my portfolio that is short term. Like I'm in Robinhood options, and that's probably by next year I'm out of those. But like long term, the only real big valuable position I have is Palantir, because I just believe in the company so deeply, and because I've just done so many, videos, which is basically due diligence for me on Palantir, that I'm like, all right, this is what I'm gonna ride or die with. I've tried timing it many times, and it's like it just doesn't work, right? It's like just like you with Nvidia, right? You've had it since 2016, and it was overvalued many times, right? But you kept through it.
So. I just want to click since 2018, but yeah,
2018,
yeah.
So, are you still DCing them in?
Yeah. Well, I haven't DCA'd heavily since $8, so I've been buying like a couple shares here and there for fun. If it gets back to 11, that's where I really go heavier, or even 12. But 14 still is a little expensive.
And do you think that Alex Karp is that guy? Does he deserve the execution credit to come with the multiples?
Yeah, I mean, look, Karp is a philosopher, a PhD that took a company from nothing, made it a company that's going to do $2 billion in revenue, and is working with the biggest countries and companies in the world, kind of single-handedly, because Palantir didn't have a sales force for 20 years, so he was the guy closing every single deal. And I've just listened to him talk many, many times. There are so many tangential paths I can go on in terms of talking about his philosophies for why he created Palantir, but I am a philosophical person by nature, so I get excited when someone is talking about the philosophy or like the purpose behind what they're doing, even more than the numbers. And maybe that's a detriment to me. But when Karp speaks about Palantir, he speaks about a vision. And that vision is something I not only agree with, I see the business potential of that vision, because they have showcased in various case studies what the business potential of it looks like, and how their vision is so contrarian that it actually creates a bit of a monopoly in terms of what they are trying to execute on, which is the entire point of 0 to 1, which is, be right and be contrarian, which is the hardest thing in the world to do. And Palantir has been right and contrarian throughout their entire life. I mean, the investment itself is a contrarian investment in the tech space. And so that's why I think Karp's if Karp retires as CEO, I'd probably sell my Palantir position. 100%.
Really?
Wow.
Yeah. 100%. I do not trust anyone else but Karp to run that company.
Why?
But
he's philosophical. Like, I don't understand. Like,
no, because
does it, like, what?
I don't think anyone else on Palantir is going to be able to shake hands with Vladimir Zelensky and be able to say, "Hey, we're giving you our software, and wink, wink, you're going to use it and eventually pay us." Like, that's you got to have a certain personality to be able to pull that off. Same thing with the enterprise CEOs that he meets with. Like, it's when he gets into business deals, he is mixing his philosophical talkings with his very technical background. Just because he doesn't know how to code or he doesn't have a PhD in computer science doesn't mean he's not technical. I mean, you see him talking with the CTO in interviews. He's correcting the CTO about specific technical things, and the CTO is like nervous and stuttering because of the fact that he just got corrected. So like, this guy knows what the fuck he's doing. If he's out of the company, I'm out, because like, I want that guy, driving the vision forward.
Sure.
How long has he been with Palantir?
How long has it been? Since the beginning, so 2003.
Okay.
Yeah.
Peter Thiel handpicked him in Stanford to run the ship.
And he has like founding shares, full voting power for the company, even if institutions come in and buy more shares, I'm pretty sure, correct?
Yeah, so him and Thiel have 51% F-class founder shares. So any institutional investor, activist investor that wants them to go work in Russia or China, they can say F you and keep doing what they're doing, which is a detriment to me as a shareholder because I really have zero say with my shares in terms of wanting the company to go to a different direction. And so it's like I gotta trust in Carp, and so it's a lot of faith in him, which is what
that's similarly with Toby Lucky from Shopify. If you don't like him, you can't like the stock because he owns it.
He's a genius. And same thing with Zucks from Meta. I mean, I think he had 60% owning class shares or something. So like, yeah, you got to trust these guys.
So maybe we can just stick on the shares point for a second. Like, how does the SBC look? How does the dilution look? I'm just curious on those fronts as well.
Yeah. Dilution is at 3% year over year, which is not too bad. And SBC is normalized. It was at 1.70% of revenues in 2020. Now it's a industry standard 21%. So it's declined dramatically.
I love the industry standard.
Well, for tech companies. I mean, if you look at Snowflake has a 50% SBC.
Yeah.
So
that's funny.
Look, and think about this, right? Snowflake increased their SBC 53% year over year last quarter. Palantir decreased it 27.5%. To get a Palantir job, you have to go through 7 rounds of interviews. I know this because I talked to these guys. It's the most, their acceptance rate is 0.7%. Harvard is 3.7%. Snowflake is giving SBC to sales people. So when it comes to where my dollar is going in terms of stock-based comp, it's going to the smartest MFers in the world. And if it's only at 20% of revenues, I'll take that because you got to get the smartest people to do this stuff.
Yeah, no, I think from what I could see, their stock-based compensation is really dropping down from where it was. And it's good to see them crack down on that. And that's probably a good portion to why the stock is also leading to better profitability.
Sorry, Tanner, on that point, as a percentage of revenue or on an absolute basis as well, dropping?
I'm pretty sure on both because revenue is not growing that fast. So
yeah, I mean, SBC is down 30% year over year, and hopefully it'll stay like that for this year and the future. I mean, if they didn't have SBC, they'd be profitable like a mother effer, but you got to get the best talent.
So sure. This profitability point is also why the board approved them to buy back shares, right? Because I remember I asked this on Twitter immediately after it happened, and I was like, can you guys just help me understand? And it sounds like the best explanation I've gotten so far is for them to be included in the S&P, which is a big goal because institutions are going to buy whatever financial engineering makes stock go up. They need 4 quarters of profitability, and in case they don't hit it, they can just buy back shares and then manufacture the EPS number so that it's positive.
They're going to be profitable no matter what. I mean, management is. I would be willing to bet my life on that. They're going to be profitable. U.S. commercial is going to get them profitable. Net interest income will get them there. The buyback, I think, is like a psychological way to show Wall Street, hey, if the stock goes to $10 and you guys are thinking of sending us to 7, just know we have $1 billion to buy this shit back up, right, and reduce the float. So to me, it's just a game that every company plays. Apple buys back 20 billion shares a quarter. Palantir is not at that level yet, but I expect them to utilize it at $11 or $12 if we get there, if not 13 or 14 if we consolidate in this area. And yeah, it's a good use of their capital because they have $3 billion in cash and they haven't done anything with it. So might as well buy back sure.
I heard, now I'll even give credit because I remember who told me this. It was Tyler Oakland, if you guys know him from Open Door. He covers that stock a lot. And he said one of the reasons, Google and Palantir and all these companies with massive gross margins, right? Which I'm pretty sure Palantir has really, really high gross margins in terms of revenue minus cost of services. They are a very profitable company in that way. But then you have all of these other factors afterwards that lead to very high costs like sales and marketing. And the problem is that every single company that has the opportunity to have a product like this with high gross margins like Palantir does, which if I remember, Amit told me, I think it was about 85%?
82, yeah.
82, okay. I also see Altec saying 79 right now, but I don't know. Anyway,
yeah,
still that you have competition galore, right? So the hope is, at least for Palantir, that they have such an amazing service, ones that can catch Bin Laden, and that one that you can deliver to Walmart to end up, selling a product better than, potentially their competitors, which could lead to much higher sales than what it would cost to actually deploy that software. And that should be the selling point. But if I could add as well to your...
I got a dip to Finance Junkies, so...
Right now?
Yeah, that's 7. Oh, this was an hour, right? This was an hour?
It's 59 minutes. I wanted to... You go.
We can end it. We can say the last minute and end it off.
Okay, I just wanted to ask about the stock-based conversation. They said, our board of directors has approved a common stock repurchase program, the first in our history as a public company. Then he said, the scale of the opportunity that lies ahead has increased significantly in recent months, and we intend to capture it.
Yeah.
Those seem like they go against each other. If your opportunity is super great, why are you spending your money on repurchasing your stock at an overvalued valuation?
I think they're just playing the game, man. Like so many people gave Palantir shit at $6-7 because they weren't playing Wall Street games. They are playing Wall Street's game. They haven't utilized the billion. They said they might utilize the billion. They never have to utilize the billion. And now Wall Street can sleep well at night knowing that Palantir could utilize $1 billion. Like, look, if they buy back the shares, they have $3 billion in cash. Could you say they should put all $3 billion into growth, sales, and marketing? Sure, but that's not how a public company operates, right? You got to buy back some of those shares, reduce the float, keep Wall Street happy. If they never do it and they just continue to grow and they keep that billion and they deploy it in some other way, maybe an acquisition or something, then they gave the perception as if they were going to do it, never did it, kept the growth rates up, and Wall Street never tanked the shares because Wall Street always thought that the buyback would happen. So to me, it's just playing both sides. I believe in that second sentence more than the first sentence. They're going to capture the opportunity. But if it takes some time to capture it and you buy it for $1 billion, then yeah, get back some shares at $1 billion.
Thanks, Amit, for coming on, man. We really do appreciate it.
This is awesome. Appreciate you guys.
See you later, buddy.
Talk later.
Bye, everyone.
See everybody.